Hello, everyone. This is Ashton Ekbatani. I'm a host for this real estate investment. We try to bring it up every Wednesday at 7 o'clock. There are tons of questions that I get from all the investors that I know. I'm trying to help them. My background is in real estate, and I'm in real estate for the last 15 years, and my forte or my expertise is real investment. And even before I become real estate agent, I was in real estate investments. And I find it so fun, so exciting. Then I thought maybe I just get my license. It's easier for me to see properties here and there. So that's why. But my wife was in real estate as well, so that was a good combination. So looking at what we have here, I'm trying to see if I can change some stuff here. Okay. So Kim, can you see the screen, real estate investment club? You see, screen is moving.
Yes, real estate investment club, yeah.
Let's make sure I'm doing the right thing here. All right. All right. So one of the first thing I like to do here is to move. That's what I said as a goal, to move from speculator to a savvy investor. So for doing that is not only what's happening in the market, where I should buy, what I shouldn't buy. It's more into that. And with whoever I'm working, I try to educate and give them idea of be careful what you do, because I like them to work independently, all the investors that I'm working with. So for that reason, my goal here is to educate, to inform, to mentor or train whoever comes across and say, I want to buy investment property, how can you help? So we're going to move from speculator to savvy investor, and I tell you why in the next slide. So here's the idea. Every single day we hear different things from media, and reality and the savvy investors, they should always look for the main point here. Just checking something with you, Kim. Can you see my arrow is moving in the center?
Yep.
Good. Okay. So you have control here. All right. So we're going to hear a lot of news and noise from media, and some of it is reality, some of them are not. And it's the task of the savvy investors to really check it out and filter of the things that are just speculations. So what we're going to come across this news in the media are something like this: real estate market is crashing. Okay, that's a big news. But when you slow down, as a savvy investor, there are a few things that you have to pay attention. If you look at this sentence that real estate market is crashing, number one, where, which market? Remember, real estate market is not global, it's local. Okay, even in 1990, was it 97? I know we had that kind of crash, and that was a big news. Real estate market is crashing in Canada. But at that very same time, Bayview Village neighborhood, they were growing 27%. So that's why I said, if the market is booming, it's excellent, multiple offers, hey, go to Jane and Finch, good luck. Nothing is moving there. So when it's the real estate market is crashing, question number one, what neighborhood, which area? Question number two, what is crashing? Is it the number of transactions that is crashing, means less transaction happening? Is it the price is the price that is crashing? Is the day on the market a property stays is crashing? So you have to really ask yourself those questions. So as a terminology here, I put average price, day on the market, absorption rate, which is a listing to sold ratio here, transaction to sales, and listing price. Now, this news was from a few days ago, but I put it here. That's one example. Said rental rates in Toronto are finally starting to decline. Okay, that's a big news. That's Toronto stories. It's online news. Now, if I go to more specific information that I can pull out from online, from different sites, the chart number one, it shows share of GTA condo apartment in rental. Okay, look at here. When they said Toronto rental rate is going down, look the share of rental unit in York and in Peel. you're as strong as Toronto. And when here we are looking at the rate, the vacancy rate. Yes, Toronto, the core Toronto vacancy is high now, but not very much York or Peel. So Peel and York are staying solid. They don't have high vacancy. So for that reason, this news specifically is talking about Toronto, not GTA altogether. So we're not doing bad. So that's what I said. Be careful what you read. Just analyze it and see between the line. Now here's another news from a few days ago. Said home sales are down 69%. Okay. Now it didn't say sales price. It said sales, which is very much referring to number of transactions, which is true. So many people, because of COVID-19, are not getting to the market. They are worried about their future. So technically, yes, there are less people buying and there are less people selling. So the low inventory help maintain the good price. Now, when I pull out this information from online again, these are public information. Anyone can have access to it. It is saying that, looking at this one, average selling price, we went up compared to 2019, 0.1%. So we are in not decline, but it's increased the price. At least hold it almost break even. Yes, and here is total residential transaction. This is what is referring to 67% less. Means the number of transaction less, obviously. Now, this news is from today. It said new reports suggest that the Toronto real estate market is entering a slump phase. Okay. Here, clue number one suggests we don't know. It's not for sure. Kind of we're guessing. It looks like we are going that direction. and this writing is very conservative. Now, that was in a way pushed by RAIN Canada. RAIN Canada is a club that I was a member many years ago for real estate investment. RAIN stands for Real Estate Investment Network. So we see this chart that was published by them. It shows what we have right now in buy and hold version of investment. On slump said beginning said possible. Look at the boom, possible. Look at the recovery, good. So this is the news. They have to throw it there to grab some attention. Now this is global news. Same like this morning, both of them. It said, despite coronavirus, GTA real estate prices are rising slightly. And this is referring to what I showed you here. So this is more into the reality. And this is just a guess, as you can see, it suggests. So don't take this one as, wow, new report said. No, it's not, it didn't say, it's just suggested. The housing market. Now, this is another confirmation of what's happening with coronavirus. This is a good guideline for savvy investors to make their clear decision. Listen, there are a lot of money made during the time of chaos, and chaos happened because of the majority of people, the public, the speculators going around. They are worried about the things, and they don't rely on the actual factual news. They are relying on word of mouth, and that's how you can make money. Despite of what people said, you trust the numbers, you trust the facts, and you go with it. So I pull out this one for you for this morning. It said housing market. Now let's take a look at what we have here. It said sales, the number of sales, and all of these colors referring to different years. So orange is 2020, blue is 2019, and let's stop at 2018. The green, because 2017 was a crazy year. So the number of sales is less, and we all know that. It doesn't mean the price crashed. Now, new listing, same thing. There are less people putting their house on the market or want to buy because whether they're laid off or they're sitting at home or they're worried about tomorrow. Now, this one is sales to new listing ratio. This is important. Look at April. When the number is here or the chart is here, That's absorption rate. It means whatever comes to the market fairly, it sells. Now, if the absorption, look at 2017, it was crazy multiple offers. Almost anything came to the market, sold. But now is normal. It's very normal. Look at all these previous years, 19, 18. So we're almost same thing. Anything comes to the market, sells. Remember, the inventory is less. But who's there is on the market? Buy. Average resale home price. Now here is the price. If you're thinking about pricing, look at 2020 or April. The price, wow, surprisingly, it's not below. It's never crashed below 2000 average 2019 or 18. You're actually doing not bad. Average price. This is the chart we should pay attention. Unfortunately, many people are paying attention to the blue color that has a lot of hiccup here, go up and down. And real estate speculators, they are paying attention to the blue line. Real estate savvy, they are looking at the long term. Look at 2018. Still, we are higher than 2018. So long term, buy and hold is what we pay attention. You have to pay attention to that if that's your strategy. Actually, right now, that's one of the best strategy to buy and hold, not to flip, because the market is very uncertain. If you buy something to fix and sell it, there are less people want to buy those kind of homes. So there are less buyers in the market. The condominium market boomed. It was great because of the price range, and I think Kim agree with that. That real estate condos market are hot because of the price range. It's more with the reach of many people. So 10.4%. You agree?
Yeah, absolutely.
A pre-construction instruction. Now, there are many of my clients are asking about the up and down or the details of pre-construction. And then just put here some of the examples that I have. For instance, M3 is a project that's happening in Mississauga, and they have payment schedule and they have what they give you. Now, this varies from one builder to another. I want you to pay attention to what we see here. Okay, so for instance, this is the payment plan. Some of them are okay with continuous 2.5%. Some of them are asking, give us 5% this year, give the next 5% the year after. Okay, so we see a variety of things happening here. What is important is at this end. Here, M3 is giving you $500 assignment fee. It means if you want to flip your condo, they're going to charge you $500. The cap development is the charges that the city would charge the builder for developing the land, bringing all those wires and everything. So M3 is putting a cap of $10,000, let's say here. Means if the city comes back and says, listen, we didn't know, but it apparently cost us $5,000 more, you're safe because you don't need to pay more than 10,000. Now, 20% extended deposit, that's nothing here. Now, this is another builder called Oro. And what we see here, they also gave you free parking. That's good, that's incentive. So why should I go with M3 or Oro? Hey, they give me free parking, they give me free locker. They didn't mention anything here.
Probably in another 15 minutes or so.
Free assignment, M3 charges 500. This is free assignment, so we will go with this one. High speed internet, I'm not crazy. Lot levy cap is 12,000. Okay, M3 said 10,000, 12,000 for a larger unit. So might be able to find out what is the details on this one. Here's another important thing, ability to rent during occupancy. Occupancy is the moment that the builder gives you the key, but your condo is not registered with the city. So sometimes it takes few weeks, few months, hopefully not more than 4 or 5 months. And during that time, if you're not moving to that place, you don't want your condo to go vacant, sit down, collecting dust, and not generate you any money because eventually you're going to rent it. So the builder, and that's important to get. Builder would say, okay, you know what, that's fine. You can bring your tenant. This is a new project is coming up in Mississauga called Tuxedo Park. They also came up with the same structure, $5,000 cap levy, which is good. two parking spots for a bigger one. Okay, here they charge you 2,500 for assignment fee. So they are trying to discourage flipping because that's they want solid buyers or sellers. 5 free appliances, that's fine. The right to lease during occupancy, they have it here as well. And here is the structure they have for the payment, 2.5 in 60 days. Any questions so far on this one? No? Okay, I think I'm clear. Okay, this is the Toronto Real Estate Board Home Index. This is something that not many agents are familiar with or they dig into. For me, it's important. That would give me some idea of what neighborhood, what city is moving towards what direction. Now, if someone comes to me and says, listen, I want to buy a property, should I go to Caledon Village or should I go to, let's say, Avondale in Brampton? So let me double check it for you. So I pull out this one. I'm looking at the growth that we had for last few years in Caledon Village. I see 10 years growth was 69%. When I come to Avondale, surprisingly, it gives me 141%. So which one would I go? Which one would I suggest? I would suggest Brampton, Avondale, and I can show these papers. Everything, these are not forecasts. These are happening already. Now, if you want to go into the details, you can always go to, I won't suggest you 6 months or 3 months because we go through a lot of hiccups in the market. 1 year, 3 years, 5 years, that's a fair number to look at. So here we see 6% growth versus 13% growth. So it doesn't mean I'll go to Avondale, close my eyes and buy any house. Of course, I have to do my due diligence. Transportation is usually one of the #1 factor of the growth. So I have to look at that factor and many other factors as well. This is another one from Mississauga, for instance. The first line of Mississauga is the average of the whole Mississauga altogether. But here we have some areas that give you less, 92% versus 109%. Or here we have 114%. That was Middlewell. That growth very well. You have 120 in Mississauga Valleys. And remember, these are the 2-stories home. We have the same information for condo, for bungalows, for detached homes or townhouses. Same thing for Burlington. I pulled it out. Burlington has a phenomenal growth. Look at 135% in Mountainside, of course. And this is around 150, 200 pages information that is coming up every single month. So if anyone's interested, I can gladly send it to them. Now that is the end of my presentation here. Any question before I go further? As a supporting tool to all my clients, I put together some learning materials and I'm going to go through it together with you. I recommend all of you to go to my YouTube channel, subscribe them. I try to be a little bit more in routine to post some information, some videos, some techniques of real estate investment. There are quite a large number of videos that I have online for instruction about real estate investment, how to buy, what to buy, which neighborhood, some of the tips, tricks of any property that you buy. You might come across different situations. So there are a lot of educational material in there. I have my Facebook as well, Facebook for Investors. We call it the Successful Real Estate Investors, a sharing and learning community. So you can go there, post your question, or take advantage of any other person's experience. So I'm just recently built it up. So there are not much audience there, but I'm getting attention from different people. So every few days I have one new members adding. There is a questionnaire at the beginning, and I would get you in there as well. I don't want to dilute this Facebook with casual things that's happening around us. So called Successful Real Estate Investors. I also developed my real estate online course because I'm getting almost once a week couples coming, sit down in my office for hours asking the very same question. Not because I don't want to answer the question, I love it, but I thought maybe it's useful for them instead of coming, mostly with this COVID-19, instead of coming to my office, sit down here, they can, in comfort of their house, learn exactly what I'm doing and all the tricks, tips in real estate investment. So this course is quite lengthy. It is, we go through 5 modules here, and it gives you all kind of training. I have also the archive there with all the extra things, like how to screen a tenant. I have a library of resources, the forms, for instance, for joint venture letters and templates, etc. I also published my book. This is one of my books, Successful Real Estate Investors. I also have Think Beyond Your Limits, which is very much working with the mindset of a real estate investor. And this is full of techniques and strategies that real estate investors they can use. I also have some children book that I published a long time ago.